Welcome to F6 Taxation. My name is Meera Shah and I'm going to be guiding and helping you through this paper, F6 Taxation. Let's start by looking at the aim of the paper. So, as it says here, the aim of the paper is to develop knowledge and skills relating to the tax system as applicable to individuals and companies. So individuals, like you and I, we pay tax, and companies pay tax, and this paper, F6, introduces us to the different taxes paid by individuals and companies. In this session, we're going to talk about something called incorporation relief. Now, incorporation relief is available when a sole trader or a partner in a partnership transfers the business to a limited company. So, in effect, they're incorporating their business or they're selling the business to a company. Okay? Now, when a sole trader sells the business to the company,
Having looked at an overview of other assignments and the different levels of assurance that we can give, what we need to do now is look at some of these specific things that you could be asked to do on the course. There are a number of other assignment types that could come up. Some of them come up rather more than others, so let's have a look at those and see what we can do with them. We're going to start off by looking at two forms of what is called a review assignment. The two most common ones that seem to come up
I'm going to record for you now a question on stocks, on inventory audit. It's actually a 30 marker, which is quite natural because if inventory does come up in your exam, it is likely to be found in question 1. It's likely to be the big scenario question, question 1. I'm certainly not saying that it couldn't come up as question 3 or 4. It could come up as question 3 or 4. But stocks have a traditional position in question 1, the scenario question. And the particular flavour of this particular stock question is its cut-off, at the year end. It's related to the accounting for stock correctly in the correct period. As you might remember, the classic error that happens with inventory is, well, those guys, the suppliers, they send us the invoice. They send us the invoice, and we record the invoice when we get the invoice. However, a few weeks later, a few days later, they send us the stocks. Now, normally that's not a problem. We should, of course, record the receipts of the inventory when we get the inventory. But naturally enough, accounting is based upon, pieces of paper. Accounting just is based upon pieces of paper. And as a consequence of which, rather than recording the stocks when we get the stocks, we tend to record the stocks when we get the invoice for the stocks.